It's time for another Southern California housing market update, and we have a lot to share about the single-family, multifamily numbers for Southern California. We're going to discuss exactly what segment of the market that we're most bullish on, and stick around to the end where we dive into pending doom. We haven't seen pending sales numbers like these in a long time. We're going to share exactly how long and explain what we mean by pending doom. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping sellers and buyers make the best decisions in this crazy market, and it's time for another one of our every 2-week market updates for Southern California, and the market has shifted. We've already talked about that in past videos, and we're continuing to see that in these numbers. You need to keep watching so you don't miss where things are headed. So if you're ready to dive into the housing market for Los Angeles, Orange County, San Diego, San Bernardino, Ventura, and Riverside counties, hit that like button. And let's get started. And here we are to compare. July is going all the way back to 2018. So this is year-over-year data. We've got a full month of July data. We've got properties that sold, the number that went under contract, and new listings. Really what matters to me, what I'm looking at, is I want to see leading indicators like the numbers of properties going under contract and the number of new listings and how those numbers compare, because that will tell us where the market is headed. So let's start out with Orange County, where we always start. And one of these years does not look like the others. It is pretty obvious to tell that the numbers have changed in Southern California. We're going to see a similar trend in all the counties we look at for single family. And there's a crazy drop in two things, well, three things, but the two more important things I'm looking at, which are the number of properties going under contract. Those are at absolute record lows, and stick around because we're going to show you how far you have to go back to see when pending sales were close to this number for Southern California. And then the number of new listings are down as well. So we're not seeing like we saw the last time rates went to 5%, which was the last big increase in 2018. Now, I do know that we've been close to 6 and we've backed off a little bit. So that's much more extreme, and it was a much faster increase than it was in 2018. But back in 2018, we saw the number of properties under contract dropping, and we saw an increase in the number of new listings. We are not seeing that in Orange County. What is also important is the gap between the number of new listings and the number of properties going under contract, because as that gap gets larger, that means that fewer properties are going to be sucked up into escrow and ultimately to closing, and that's where we start to see big gains in inventory. And make sure you stick around Friday, because we're going to dive into the Altos numbers and we're going to show you the Southern California inventory numbers. We're not going to cover that in this video because these videos are getting to be 20 to 30 minutes long. That's too much to ask you to suffer through. So looking at the gap in 2022 between the number of new listings and the number of properties under contract, we can see that that gap is actually smaller than 2018 and 2019. We're not seeing a big swell in the number of new listings coming. So as long as this trend continues, we're not going to have an excess of inventory. We will see it go up slightly. We'll see that on Friday. We'll see that increase, but it is not a massive increase, where as these numbers get farther apart, that's where things start to get in trouble. In some of the other counties, it'll be interesting to see that gap is larger. So right now, we definitely have a shifted market, but if you're out there shopping, it's not going to feel like an extreme buyer's market at all, because there isn't enough inventory for that to happen yet. You can see that if you were out shopping in 2018, there was actually more available to you as a buyer than there is in 2022 to look at. So that's an important point to make for Orange County, and let's see what the other counties look like as well. Los Angeles, same thing. We're going to see this. Don't be surprised when you see the big drop in the number of properties going under contract and the number of new listings. We'll get the sold out of the way. And you can see this is one where we got to watch and see what happens. We have not seen 4,500 properties trade in a month in a long time in Los Angeles, as long as I've been doing these reports, and I'll show you how far back we have to go. And you can see that gap is pretty large. It's not as large as 2018, but that's a big gap between new listings and pending sales. We could start to see inventory start to increase even faster in Los Angeles. Again, we're looking at July's, and it'll be very interesting to see where things go in August. and the fourth quarter. Fourth quarter is going to be a very interesting time. And Riverside, we have our drop in listings, drop in pending sales. Look at 2020, how crazy it was by July, the number of properties going under contract. It's easy to forget that we were at the point in July of 2020 where the market was taken off. There were multiple offers, and you can see the gap between new listings and pending sales is large. In fact, as large as 2018, maybe a little larger. So we got to keep track on what's going on in Riverside. As I've said in other videos, they'll drive from the coast into Riverside. They'll drive until they can qualify. And as prices have gone up in Orange County, for example, more folks theoretically will be going out to Riverside. But with the cost of gasoline, that's going to affect the number of folks that ultimately are going to buy in Riverside, or maybe they'll just stay in Orange County and rent. So we're going to see an effect on rents. I'll do another video on that. San Bernardino, again, we've got our drops. Actually, what's interesting is the number of new listings we had in 2020 was lower. So this is one of the few counties where we don't have a record low in the number of new listings, but we definitely have a record low in the number of properties going under contract. Again, the gap I keep talking about, that gap between the new listings and pending sales is similar to 2018. So again, to reiterate what this means, it's going to feel a lot like 2018 out there if you're shopping for a home. In our buddy Ventura, we definitely have that similar thing. We have the drop in listings and we have the drop of pending sales. It does appear to be a big drop. In fact, it's almost to the point where there are half as many properties under contract in July of 2022 as there were in July of 2020. So that's an interesting trend. That's a big gap between the number of new listings and pending sales, bigger than 2018. As we've shown in other videos, is in Ventura, they're kind of beat to their own drum. So this doesn't necessarily mean much that the numbers are so low. We'll keep tracking these to see if the trend continues. And finally, San Diego, red hot San Diego, and the Altos Research Reports was 100% a seller's market a few months ago, is now not the case. We do have the record low inventory and the record low pending sales, but that gap, like we saw in Orange County, it's not as big as it was in 2018, very similar to 2019. So again, if you're shopping in San Diego, it's still a seller's market, not as much as a seller's market as 2020 and 2021, but still a very solid seller's market. Don't forget that we're real estate agents based in Southern California. We can help you with buying or selling real estate right now. And our channel is one of the few places you can get multifamily data. It's important to continue to look at these numbers. I'm actually super bullish on multifamily. I have a feeling that as investors continue to chase returns, they see the stock market's down, we may see more folks getting into multifamily real estate, because despite the increase in interest rates and what I've talked about, how it's going to affect cap rates, we are going to see very strong demand as interest rates have gone up and forced folks out of the possibility of purchasing until prices have dropped dramatically, which we don't know just how dramatically prices will drop. They're going to have to rent. So there's going to be very strong demand for rentals. Now, of course, it's not all just multifamily. Folks actually live in houses and condos as well. But there is going to continue to be a very strong demand for multifamily. Construction is slowing for multifamily. Builders are spooked about where the market's headed. That means that the supply is going to continue to stay low and the demand will be very strong as folks have nowhere else to live. They're not going to buy. They can't afford to buy. So let's continue to keep an eye on multifamily. I feel that it's going to pick up and get even more extreme of a seller's market. And we'll see some of the counties that are slowing for multifamily, but I think that's going to turn around. And again, that's even with the change in interest rates and how it could have an effect on cap rates. Rents are up significantly all across the nation and in California. We can see in Orange County that it is a solid market. So this is kind of a normal market. LA multifamily, don't forget, Los Angeles City, Los Angeles County are still under the eviction moratorium. So if a tenant is not paying, you can't evict them for that. And you also can't evict them for a whole lot of other things right now. So still a solid market. Down in pending sales, and it could be due to the extension of the eviction moratoria, but we're also down in listings. So the gap between new listings and pending sales is actually smaller than it is for 2018. Moving on to Riverside. So actually Riverside is one that's continued to puzzle me. We're seeing a big drop in the number of properties going under contract. and we see the listing drop as well. But you can see a drop. Like if you just looked at this on its own and you didn't look at any of the other counties, you'd think multifamily is doing poorly in all of Southern California. But that's not the case. For some reason in Riverside, and we've seen this, that we're seeing a big drop in the number of buildings trading. I expect this to turn around in the not too distant future. Just like I was saying, more investors are going to move into multifamily. I think Riverside, we're going to see this turn. San Bernardino, another more affordable market for renters. Typically, we're down slightly in the number of properties going under contract, and we're down on the number of properties that were listed. So that's at a record low. Look at 2018. You had a massive gap. So 2018 was actually probably the most buyer's market we've had in a while for multifamily. You should have bought in 2018. And you can see it's moving along. It's dropped a little bit, but it's still strong. Moving on to Ventura, not as many buildings trade. The numbers get skewed very quickly. We're not at a record low for pending sales. It looks like 2018 for pending sales, but there's fewer properties that were listed. So it's definitely actually one of the more solid sellers markets right now in Ventura for multifamily. So San Diego, we saw a drop in the number of buildings that were listed, but we still have a solid number of buildings going under contract. So it's actually the tightest the market's been, kind of like 2019. You can see 2021, we had a big increase in the number of listings. That's interesting to see how many buildings were listed, and it's since dropped off then. So this is definitely more of a seller's market for San Diego multifamily. So what do I mean by pending doom? Well, let's look at the pending sales numbers, and it'll hopefully give you an idea what I mean by this. We're going to use the InfoSparks tool, the same one I use for median home price. You'll see that on Friday. We are looking at the number of pending sales in the entire MLS. That includes a few areas outside of Southern California, but we can use this as representation because the trend is the same. If you look up in the corner, you'll see the entire MLS is down 50.7% for pending sales, and this is year over year. Now, last year we had a lot of pending sales because it was just a crazy year, but a drop that big is a massive, massive drop. And looking at the numbers, we can see that in July we're down to 12,325 pending sales, and you can see another important fact, and that is it looks like a saw because the numbers go up and down. Pending sales drop in the year. That isn't, on the face of it, a big issue. But there's something here, there's a devil in the detail that makes it different and makes it a little scary, a little bit of doom in the numbers. And we're going to have to keep tracking this to see where it heads. Let's go ahead and take a look and see how long it's been since we've had around 12,300 pending sales in a month. And we don't have to go very far. We go back to April 2020. Think pretty hard. Why were pending sales drop? Well, because of COVID. That's why pending sales were down. It hit in March. A lot of the lockdowns happened in California in March, and that ultimately led to pending sales dropping in April. And you can see they spiked, like I talked about in the video, and I've mentioned before, they went through the roof. And by July, in the summer of 2020, things were crazy and they didn't slow down. That dip you see in pending sales in 2021 was one of the highest of the dips, as you can see. So let's continue to go back. So that doesn't count for a dip because of COVID. You have to go all the way back to December of 2010 to be at 12,300 pending sales. That is a long time to go back, and it was a lousy time for the market then. We remember we were reeling from the global financial crisis, tough time for sales. So to have to go back to 2010 is not a very good thing for the number of pending sales we have in July. But there's something even more interesting in the data. We can see it looks like a saw, as I mentioned. So the bottom, December 2010, next bottom, December 2011, next bottom, December 2012. Are you noticing a trend? Anybody, raise your hand. I'll call on you. December 2013. When do we have the fewest number of pending sales? It's December. Every year, that's how it goes. Other than COVID, which changed things. There's December of 2019 before COVID. That was a low. So the problem we have is that we're at a record low number of pending sales in July, and we have quite a few months to go before December. We have to see where things are going to go. It is going to continue to get interesting for the rest of 2022 and fourth quarter. So of course, make sure you stick to our channel, subscribe, ring that bell so you get the update on where pending sales are headed for Southern California. Make sure you tune in Friday for the rest of the housing market market data for Southern California. We're going to run through the Altos Research reports so you can see where inventory is headed. And then we're going to cover the median home price and exactly what direction that's going. And if you want any of the charts from this video, make sure you subscribe to our free weekly email newsletter. We give you those charts and a whole lot more you're not going to want to miss. We have a link above and we have a link below so you can sign up right now. And make sure you check out this next video where we give you more information on the Southern California housing market. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.